We detected an unusual trade worth $107 million on Tesla stock options placed by the same wealthy investor we've been tracking. That's how we've already made over 200% profit on our Tesla trade. And so in this video, we'll continue to reveal how this wealthy investor is trading Tesla and show you how we updated our options trade into a no-loss strategy to manage risk using new data on unusual option activity. Now, if you've been following our channel, you know that we went long bullish on this day, April 23rd, because we detected an unusual trade by a wealthy investor when Tesla stock was trading at around $250 per share. And as you can see here, ever since then, the stock has gained about 37% in less than a month. This was the video analysis we shared on our channel where we broke down a $44 million options trade to decide whether it was time to buy Tesla stock right after Elon Musk backed off Doge. And we concluded that the data was pointing to a Tesla recovery, clearly flashing a buy signal. And as it turns out, our analysis was correct because Tesla stock has since recovered and is now trading at $347 per share. And so, if you want to learn more about how we did this, we'll put a link to this video up here. Don't forget to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, how much profit did we actually make from our Tesla trade? It wasn't just 37% like the stock move, because we traded options, which gave us the leverage to capture even bigger gains. Understanding the size of that profit is important because it's what allowed us to set up our next strategy risk-free. And so let's take a look at our original trade, the same options that a wealthy investor was trading as well. It was these August 15 options at the 290 strike calls, priced at $2,219 per contract when we entered this trade back on April 23rd. Keep in mind, this shows option prices, so we either move the decimal 2 places to the right or multiply by 100 since each option contract represents 100 shares of stock. Now, let's dive into the new data tracking this specific options trade and see exactly how much these options were closed for. As we can see here on the options time and sales tape, on May 14 at 10:18 at the 24-second mark, the same wealthy investor traded those August 15 options at the 290 strike calls again, but this time added the 380 strike calls. Now take a look at the price our 290 strike calls were being traded at, about $7,468 per contract. And so to calculate the profit per contract, we simply subtract our original entry price. So we have 7,468 minus 2,219, which gives us a net profit of $5,249 per contract. And to calculate the profit percentage, we divide our profit by our initial cost of $2,219, then multiply by 100 to get a percentage, which results in a total return of 236% profit on this trade. In other words, we made more than double our original investment on this trade. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where smart money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information that help them make smarter financial decisions. It's no secret that the rich get richer when they trade based on deeper insights. And so if you want to get access to more of these insights from the rich, then just head over to our website. We'll put a link up here where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all unusual trades will be winners, But as long as we use strategies with a better risk to reward setup to maximize profits and minimize losses, then we can stay consistently profitable over the long run. And so, as a real-time example, let's go over how we updated our Tesla trade into a risk-free option strategy with no possible loss based on this new data tracking this wealthy investor. Through our deep research and analysis of multiple variables and data sets, we found that this same wealthy investor closed these 290 strike calls to lock in profits and rolled those gains into a new options trade at the 380 strike calls, a higher strike price. And that's exactly what we did as well. Let's do a quick calculation of the size of this new trade. We have $3,195 per contract, multiply by the quantity of contracts, 33,779, and that gives us a $107 million trade. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. Now, with that said, even though this trade carries higher risk, we still took it. Why? Because we managed the risk by rolling our previous position from the August 15 options at the 290 strike calls into a new trade at the 380 strike calls. The same strategy this wealthy investor used. You can see our new position here. POS stands for our position, and the green color means a buy position. And take a look here. There are now over 37,000 open contracts at the open interest, showing strong activity and continued interest in this options trade. And so, by closing these 290 strike calls by selling them, we locked in profits because we used those gains to buy these 380 strike calls, which cost less than the amount we sold the previous position for. That means we entered this new trade at a credit, not a debit, making it a risk-free setup using only profits from our earlier trade. And so when we analyze our trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same August 15 options at the 290 strike calls. So we are just left with the 380 strike calls that expire August 15. And so on the graph, the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here. We can see that if Tesla stock goes down, our trade would not have any negative loss because we've locked in more profits than the cost of our new trade. And that is how we updated our options strategy to manage risk by minimizing losses. In this case, we eliminated any possible losses while still giving us the chance to gain more profits if Tesla stock moves higher. And so, if you missed our previous analysis on Tesla that allowed us to enter this new strategy now to trade risk-free, we'll put a link here so you can see how we predicted this Tesla recovery that led to a 236% profit so far. If you want to learn more about how to increase your profits, go to our website. We'll link that as well. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.